Greetings, gearheads, and green enthusiasts, and welcome back to Stocks Telegraph. Today, we're shifting gears and focusing on a once blazing electric vehicle star, Rivian Automotive, or RIVN for short. Remember when Rivian took the market by storm in late 2021? Its stock skyrocketed, fueled by excitement about its futuristic trucks and the backing of industry giants like Amazon and Ford. But fast forward to today, and RIVN's trading at a fraction of its former glory. So, what happened? And more importantly, is now the time to jump on the Rivian bandwagon, or is it best to steer clear? Buckle up, because we're about to delve into the world of RIVN, separate the hype from the reality, and see if this EV stock deserves a spot in your portfolio. Before we hit the gas pedal on our analysis, we want to hear from you. Did you get caught up in the Rivian hype back in 2021? What factors would make you consider investing in an EV company? Leave a comment below and share your thoughts. Now, let's shift into high gear and explore Rivian's recent financial performance. In the next segment, we'll unveil some key metrics and see if the numbers tell the whole story. Stay tuned. Rivian's financial performance presents a mixed bag. On the one hand, we see a current price of $10.70, which is a significant drop from its 52-week high, indicating a potential buying opportunity for some investors. This pessimism is countered by the analyst's mean target price of $14.49, suggesting a potential upside of over 35%. This positive outlook from analysts hints at a future turnaround for RIVN. But the story doesn't end there. RIVN boasts some impressive growth metrics. Their quarterly revenue growth sits at a staggering 82.15%, showcasing a rapidly expanding business. Furthermore, analysts predict an EPS growth of 35.04% for next year, signifying a company on a potential growth trajectory. These growth indicators suggest that RIVN is actively scaling its operations and could be poised for future profitability. RIVN's financial performance is a mixed bag of positive growth indicators and a lower current stock price. So far, we've explored Rivian's financial performance and seen a mix of positive growth indicators and a lower current stock price. But the story goes beyond just numbers. Let's shift gears and take a closer look at recent developments surrounding Rivian to see if they offer clues about the company's future. Rivian isn't resting on its laurels. They're actively expanding their product portfolio with the upcoming launch of the R2 SUV in 2026, a more affordable option that could broaden their market reach. Furthermore, they're planning to introduce the sportier R3 and Rex SUVs in late 2026, catering to a different segment of the EV market. This product diversification strategy positions Rivian to capture a larger share of the burgeoning EV market. Rivian is also upping the ante on customer experience by opening new spaces across the US. These showrooms provide potential buyers with a chance to get up close and personal with Rivian's electric vehicles. But that's not all. In a recent move that could significantly improve consumer appeal, Rivian announced compatibility with Tesla's supercharger network. This game-changer allows Rivian drivers to utilize Tesla's extensive charging infrastructure, addressing a major concern for potential EV buyers: range anxiety. Starting in 2025, Rivian vehicles will be natively compatible with superchargers, eliminating the need for adapters. This strategic move positions Rivian to compete more effectively in the EV landscape. Rivian's roadmap to growth and expansion, coupled with its strategic partnerships and expanding customer accessibility, paints a promising picture. Unlike many EV startups struggling to ramp up production, Rivian is a breath of fresh air. In 2022, they churned out a respectable 24,337 vehicles, and that number more than doubled to a staggering 57,232 vehicles in 2023. This impressive production prowess positions them as a leader in the EV manufacturing race. But Rivian isn't just about quantity, they're also focused on quality and cost-effectiveness. Their in-house Enduro drive unit is being integrated into more vehicles, reducing reliance on third-party components and lowering production costs. This commitment to vertical integration bodes well for Rivian's future profitability. In fact, they anticipate achieving a positive gross margin by the fourth quarter of 2024, a significant milestone on the path to financial sustainability. However, Rivian's journey isn't without its challenges. Their stock price has dipped over 20% in the past year, partly due to a predicted production flatline at around 57,000 vehicles in 2024. This slowdown is attributed to a combination of factors: tougher economic conditions, fierce competition in the EV market, and a temporary plant shutdown for upgrades. While this news might raise concerns, it's important to consider the bigger picture. Despite the production slowdown in 2024, analysts remain optimistic about Rivian's long-term prospects. They predict a robust compound annual growth rate of 39% in revenue from 2023 to 2026. This projected growth is fueled by Rivian's plans to expand production capabilities, launch new SUV models, R2 and R3, and continue fulfilling Amazon's van orders. While profitability might not be immediate, Rivian's stock is currently trading at a very attractive valuation, just 2 times this year's sales. This low valuation suggests significant upside potential if the company can execute its growth plans effectively. Rivian's impressive production record, focus on efficiency and anticipated positive gross margin paint a compelling picture. However, the production slowdown in 2024 introduces an element of caution. So, is Rivian a worthy addition to your portfolio? The answer, as always, depends on your investment goals and risk tolerance. Rivian boasts an impressive production record, a focus on cost efficiency, and a strategic partnership with Amazon. Analysts are bullish on their long-term growth potential, predicting a significant CAGR in revenue over the next few years. Furthermore, their current low valuation makes them an intriguing option for value investors. However, the short-term production slowdown and the competitive EV landscape introduce some uncertainty. Rivian presents a compelling proposition for investors seeking exposure to the burgeoning EV market. Their production prowess, focus on efficiency, and strategic partnerships position them for potential future dominance. While the short-term production slowdown is a cause for concern, their long-term growth prospects are undeniable. Only time will tell if Rivian will become a major player in the EV arena, but one thing's for sure, they're a company to keep a close eye on. Let us know your thoughts in the comments below. Do you believe Rivian has what it takes to compete effectively in the EV market? What are some of the biggest challenges facing EV companies today? Thanks for joining us on Stocks Telegraph. If you enjoyed this analysis, don't forget to like and subscribe for more in-depth explorations of exciting investment opportunities. Until next time, happy hunting!